Okay, the Hedgeless Horseman here. I thought I'd make a video talking a bit about uh, my current strategy and why I've been basically harping on about this being, in my opinion, one of the best opportunities in the junior space that I've seen at least. First of all, I would like to start with going over some game theory. Basically, what you have here is a chart of Berkeley Mining, which is a silver junior. It's been around for many years, like 17 years at least, actually further back than that. It's been a mature silver junior for quite some time, meaning that it has had a very large silver resource with huge capex, etc. in Peru. It has not been developed, obviously. It's still just a resource, or it has some economic studies done, etc. But it's still basically just a lot of silver sitting in the ground. So it's one of the most levered plays you can find in the silver space. For each dollar the price of silver goes up, I think the NPV goes up by, I don't know, 100 million, whatever. It's a huge number anyway. So it's basically a speculative vehicle. It's as close as it comes in terms of trading sardine, at least that I've found, because it has the track record, the resource, not really going anywhere, etc. So, I mean, if we just look at Bear Creek Mining, how that's been trading since 2005. So that's many years of data. We're up to like 16 years. And as you can see, it has, a huge range, especially in the early days. I think this was before it actually had a resource. But since, let's say, since the crash 2011, 2012, it's basically been stuck in a pretty wide trading range. So, I mean, if you just looked at this chart alone, if you were a pure Bear Creek Mining trader, let's say, uh, you should quickly realize that there are a few levels that basically has been a buy every time for over a decade. And there are obviously, different kinds of expected returns within the trading range when it goes down to, I think, the low point here in 2016 that generated some 673% return within a time span of like 5-6 months. So I mean, if you get one of those, if you're on board on one of those movements, you can basically retire for 10 years because you would have beaten the index, let's say. But anyway, back to the point of why I call this chart the point of no return. So again, I've just drawn up some lines here that, okay, we have this level here has been reached now and then going back from 2005. So if you assume that as long as Bear Creek Mining is around, you will see sentiment drive up Bear Creek Mining to this level, or potentially a lot higher, as we saw in 2006 and 2011. And okay, that also highlights the fact that, or on the flip side of the coin, anytime it reaches some levels below here, it has always led to great returns. So I've just marked out some expected returns here. That, okay, if you bought Bear Creek Mining at this level, you could expect 100% return within at least, okay, this took like, I don't know, 4 years or whatever, which is still a good return. I mean, 100% over 4 years. that's great, even though nobody is actually gonna consider it great, because in the junior mining space everybody wants a 10 bagger tomorrow. Regardless, that is beating the index on the long term. If you could just get 100% returns every 4 years, that's a good result. But anyway, back to the matter of hand. I'm going quite off the rails here. What I want to highlight with these arrows is that, okay, if you see Berkeley Mining reach these levels, you can again expect a 200% return once sentiment in the juniors have hit a high again. I mean, as always, it oscillates like this. I mean, this is, to me, Berkeley Mining is the closest to basically a junior mining speculator sentiment proxy as you can get. That you have these extremes, it goes up hundreds of percent, and then it crashes like 70 to 80 to sometimes 90%, and then it goes up again within X amount of years. So, I mean, this right now tells me that we're at extremely depressed sentiment levels in the juniors. And it's, I mean, this level in Berkeley Mining has only been seen, happens a few times every year or so, every couple of years at least. And the thing is that if this pattern, let's say, that's been ongoing for over a decade holds true, one should expect 100% return from here, a 200% return at least from here, 300, 500, etc., etc. And I see a lot of people on Twitter and elsewhere in the forums, etc. They're basically throwing in the towel because in their opinion, or the feeling they have is that, okay, the shorts are awful out there, nobody's buying juniors, everything's going to shit, and they look at this trend and just extrapolate it down basically, like always happens. I mean, here you would extrapolate it going this way, and here to the moon, yada yada yada. But I mean, again, from a game theory perspective, looking at this short for over 16 years, it would be extremely dumb to sell here. Because if history repeats, which it has done for over 16 years, you're going to get a 200% return from here. And there's going to be a lot of people who basically will say that, no, okay, I'm not catching a falling knife. I'm going to wait until the knife has stopped falling. And again, because they feel that, okay, this trend is just going to continue. But at the same time, look at, if you had that mentality, which majority of people always has, especially at the extremes. I mean, here for example, you wouldn't have bought this because you were fearing that it would head here, and if it would have headed here, you would fear that it would head here. So I mean, in theory, it sounds good and all to just wait for the bottom. But every time a bottom arrives, it never feels like it's the actual bottom. And again, from a game theory perspective, if you're at a level that you has returned 200% every single time within a few years on average, sometimes a lot quicker than that, there's no way that you can really sell. Because if you sell hoping for a 300% return, I mean, that's basically as greedy as it gets. Because I think the same people that would be waiting for an even better opportunity are the ones that never make any real money. Because they will always be waiting and waiting and waiting for the perfect opportunity. And let's say here, for example, let's say you bought here, expected 200% returns, and then it broke down. And you would actually be down 56%. And that's buying low, of course. Many people believe they made a mistake by buying something here and it heads here. But if they would have just held on and didn't sell, they would be sitting at a 200% return within a year and a half. That is extremely good. And this also brings me to the point of outcome dependence, that majority of people, they look at the results and then form an opinion if it was a good or bad decision. Which is, in my opinion, is not the way you should do it. I mean, in poker, for example, if you go all in with, knowing you have the worst hand and win, you might think that was a good decision, but in the long run, that's a money-losing proposition. And yes, that time you actually made money. So, I mean, okay, one could say that it was a good decision, but because you won. But thinking like that is gonna lose you money over the long term. I mean, that's just goes without saying. But anyway, I'm ranting on here. To sum up, we have reached a level in terms of sentiment where it is impossible for me to sell. We're well beyond. I'm always basically fully invested, but especially when you reach this level in Berkeley Mining, that's a very good level, because again, even if you bought here, it went down there, it still went up to here, and if you bought here, it went down first and up, down first and up, even here again, okay, down first, a lot down, and then still up. So I mean, if you only held on until it reached this level, anytime you purchased here, you would make 100% return. And again, saying no, especially at this level, to juniors because you fear it might go down, that is extremely, extremely, extremely greedy. You're saying basically that no, 200% returns within a few years is not good enough for me. Like you're gonna find 200 plus returns anywhere else that easily. That just doesn't happen. I mean, 95% don't beat the market over the long term. Why? Mostly due to, impatience, etc. And of course selling when you should be buying. I mean, again, people sell here fearing it will go lower, sell here, sell here, sell here, sell here, sell here, sell here, sell here. You're always going to project downwards. And that's why it's also very hard to actually take profits. So let's just assume that you followed this and you were really bad at selling. Or you have been really bad at selling. But let's say you just always bought when it came down here, you bought more when it came down here, bought even more here, here, here. If you did that, you would have amassed quite a position in Bear Creek Mining. And even if you've held the stock for like 6 years, but if you've been adding all this time, you just have to wait for the next sentiment high. And this time around have the discipline to actually cash out. Because every purchase, if you purchase here, okay, if you put in $1,000, that's a 200% return. So you're looking at $3,000 next time it goes up, and now the same thing. So I mean, even though it might not look like it's going anywhere, etc., but if you just bought cheap during this entire period, every purchase would have an expected return of like 100% to 300%. Even if it took a few years, that's still good. Obviously, the lower you can buy, the better, and that's why I'm like pulling out hair almost when I see people giving up on juniors. I mean, it's just, human psychology. Never, ever, ever do people actually want to buy, or they want to buy cheap until the bargains arrive. I mean, there's no way in hell I'm parting with any juniors right now, especially since the actual business, the underlying business, especially in gold, the producers are basically at record cash flows. So the underlying business itself has not been worth more in at least 2 decades, which is why the valuations in the juniors, especially gold juniors, make even less sense. Makes no sense at all. I mean, many juniors are trading like gold was at 1100, which it actually was back in 2015-16. Back here, on a snapshot basis, no gold project was worth anything. So at that exact point in time, it actually made some sense that juniors were basically priced like they were worthless, because the underlying business at the time was worthless. Gold is at 1780 or something right now, and again, the producers are producing record cash flow. There is no way in hell this makes sense. This is probably the best opportunity from a risk-reward perspective that there's ever been in juniors. Perhaps the flash crash was actually even better, because then gold didn't really go down much, but some juniors like Bear Creek here and a lot of others went down 50%. So that's also a case where like the intrinsic value stayed flat and you just got a 50% discount due to obviously just liquidation and sentiment. Anyway, I hope I have driven home the point at least. And I would also point out that I don't personally own Bear Creek Mining. I don't like trading sardines. This is just a proxy for junior sentiment, which basically shows that, okay, right now, no retail wants to be invested in the junior mining space, and in this case, a silver junior. You only see levels like this in Bear Creek Mining a few times in the last 2 decades. So if there was ever a time where you would have the most no-brainer buying environment in juniors, especially gold juniors, this is it. I'm 100% deployed, which I pretty much always am. I just have ramped up my dry powder generation because this is the biggest layup I've ever seen. The only way to lose if you have a very diversified portfolio of juniors right now is basically if the gold sector disappeared. Because otherwise, someday there's going to be someone that wants to buy some junior. And like always happens, I mean, when the sellers have ran out, there's only buyers left, pretty much. I mean, I've bought some micro cappers recently, and I stood for 50% of the daily volume. So possibly it was me and one other person who was buying that day. What happens if a third person wants to buy, or a fourth, or a fifth, or 50 additional, happy speculators actually feel like buying some juniors? That's when we're gonna see a momentum shift and head up to a high. So I mean, that's also the important point, that no correction lasts forever. We're always gonna go like this, back and forth, back and forth. And honestly, that's all you really need to know, that sentiment now is extremely pessimistic and there's no buyers. And we're right now running out of sellers as well. And of course, I mean, an important point is that this is tax loss silly season. So the ones that have already been hammered gets even more selling because people want to, plan their taxes. So don't trust the market at all. I mean, the junior market right now is giving no signal, no signal of value in terms of what the actual companies are worth. Just look at this as, like I look at paper gold. I mean, it says gold. In this case, it says Berkeley Mining on this, the stock. But I mean, it doesn't really track the business at all right now. I mean, there's no way that Berkeley Mining's intrinsic value goes up, 200% and then down 70% or whatever. That's just not how it works. It's not that volatile, the business itself, even though it has huge beta, obviously. But just try to disregard what quote signals the market is sending you, because it's 95% bullshit right now. I have no respect at all for the junior mining sector in terms of, Mr. Market's ability to price anything really, especially now. So I would, I mean, again, I'm just looking at a market that I think is totally clueless, and the people selling to me right now, I think they will, look back and, like a lot of people have done in the past, and say, why on earth did I sell that low? Why on earth did I sell that low? Yada yada yada. And because they forget that sentiment always swings. Okay, thank you.